Good morning. I'm Jimmy Ralph, the CEO of Board of Advisors, and we're here in Las Colinas, Texas at the Ritz-Carlton for our first meeting in our 11th year of Board of Advisors. And we're entertaining and meeting some of the greatest business people in America today. And we have been all week. It's been a really exciting week. So today we get to chat a little bit with Matt Pearson from XL Empire. And wait till you hear this, you guys. So we're going to talk about tax savings and all the cool things that he does. So welcome. So how did just go? Let's go back a little bit further. I mean, how did you learn what you know? How did all these ideas come? I know from what I've heard this week and talking to people that you've worked with, the savings that you get them is incredible. And I don't know if you want to talk about numbers or not later,
yeah.
but it's incredible what you're doing to save people. But go a little bit back further. I mean, did you learn accounting in high school or?
No, I started right out of college working at a Christian nonprofit. Worked my way up as the executive director of a Christian nonprofit for 18 years. And I was terrible at asking people for money. And so, I wasn't doing the fish-a-thons or all of those type of things. I just read, hundreds and hundreds of business books. And I would travel to different big cities and I would meet with business owners and they would say, "How do I pay you?" I said, "Well, I'm paid by the camp and retreat center. But if you want to send some kids, if you want to help sponsor this building," and that's really what started happening. And the Lord just started moving in my heart to say, there's a lot of people that can do what you do in the camp ministry. And a lot of people would love to do that. But you have an ability to have a conversation with people that are not as comfortable talking about church. So I kind of felt like early on I was called into marketplace ministry. And that's how things got started. So coaching was a natural place for me to go because I'd probably been doing it for about 8 years prior to that.
Okay. And when you say coaching, were you doing general business coaching or
speakers
coaching?
Mainly business coaching. But again, the majority of my coaching was more on like the offense and defensive side. I grew up playing basketball. And so the one thing about basketball that's a little different than many sports is, for 30 seconds you're playing offense and then for 4 minutes you're playing defense and vice versa. And at the end of the day, if you're not good at both of those things, you're just not going to be on the court. Mm-hmm. And so that was the thing that I started working with my business clients was like, hey, there's offense and, a lot of books out there about offense, but of the levers that you can pull, you need more clients. Well, you just don't automatically get more clients, but you can increase your conversion ratio. So it was all about the numbers. And I used to joke with people, hey, I'm not Bob Ross. You give me a blank canvas, it's not going to look very good. But you know what? I can paint by the numbers. And so that's how I started coaching people was if you don't know your numbers, then you really aren't running a successful business. You're a wishful thinker. And today I will tell you, even people, $20, $30 million businesses, they're running their business. Their profit and loss is a bank statement. So there's no way that they can forecast.
Right. Yeah. So, we see that in the last business that I owned, and we sold last January before I became CEO at Board of Advisors. Yeah. We'd acquired probably 30 small companies and a lot during the pandemic, but then a lot, over an 8 or 10 year period, and it's amazing how little a lot of business owners know about their business.
Yeah.
It's really managed by the checkbook. Well,
yeah.
I'm fine today. I got 20 grand in the bank. Well, what's going to happen tomorrow? So, business modeling, which I'm going to ask you about that. So how much modeling needs to be done? I mean, so you want to have if you're making a lot of money, you need a good CFO, you need a good firm or whoever is doing your taxes and so forth. But how much does modeling play into that? I mean,
a whole bunch. So first thing we start to look at when we start to work with a client is, of course, obviously the structure. And there's tons of things that you can do with the structure. We took over a dentist client, pretty large dentist client out in the West. They had purchased a company, and the first thing they were looking for was a good CPA, and when they started meeting with us, they're like, hey, we just need a good CPA. And I'm like, well, we're not probably a good fit then, because, CPAs are about putting the right numbers in the right boxes at the right time. Where we would come in is we could do that part, but if that's not really what our strength is, it's helping you understand what those numbers mean and how can you adjust those numbers. And they said, well, I'll tell you what, the first thing he did is he says, we've been a C Corp and we bought a C Corp, but the first thing he wants to do is, this is in October when I started talking to him. He said, we want to switch to an LLC S Corp. He said, that's much more modern. I said, yeah. I said, I'll tell you what I can do. I said, send me over your last year's taxes. We'll take a look at it, and if we can help or give you any idea. I said, that's not always the best move, but it likely is. And we found $643,000 of net operating loss that was carrying forward, that if they would have made that switch,
would have been gone. Yeah,
over $120,000 of taxes that they would have had to pay, that they couldn't use that. So they immediately found out, like, wow, there's more to it than just keeping the books and making sure that we're compliant, because that's really in the world that we live in. It's a very compliant world. It's very compliant focused. And most of the people that are in that world, unless they've been self-taught, because a CPA is not taught tax strategies or even, even business modeling. And so what happens is we were able to come in and show there's a huge differentiating factor between somebody that is going to handle some of that CFO modeling and projecting, because most people don't even know what their taxes are until they get an email from their CPA like January 15th that, hey, by the 31st you have to pay an estimated taxes of X. Mm-hmm. And it's like, well, that's just the way the world works, where our team can tell you starting in January, like, hey, you're trending toward, you're going to pay about another $20,000-$30,000 in tax. So even in first and second quarter, we can start saying, here's some strategies that we may have to start implementing. And again, defense, what was the guy's name for Alabama, said, offense sells tickets, but defense wins championships. The number one reason.
Saban? Huh? Is that Saban? Or,
no, it was
Bear Bryant?
Bear Bryant.
Oh, wow. Okay.
Yeah. And I just find that so true, that, the reason I think so many businesses go out of business is because bookkeeping is an afterthought. The CPA is somebody that they like and kind of lets them, give them their shoebox. Today it's a digital shoebox, maybe on a thumb drive or something, mm-hmm. where if you're working with the right type of person, we find in our industry, 21% of the tax savings comes from doing the books right. Okay. And most business owners either has their mom or their spouse mm-hmm. doing the books.
What's your, that's interesting you bring that up. So what's your average size client, or what's your range of, whether it's revenues or taxes or whatever? How do you think about that? From
a business standpoint, they're probably going to be in that $5 million annual revenue, gross revenue. There's obviously some things that we can do for smaller businesses. But for the people that really, are really starting to hurt their business and the opportunity, they're missing out if they're not working with somebody or hiring an internal CFO, or even getting a fractional CFO for that matter. On the individual side, I would say somebody making, $500,000 to $600,000 in W-2. So on the personal side,
that's
somebody selling an appreciated asset mm-hmm. of over $1 million, where their basis is less than 250. So,
are there certain sectors, certain industries that you find more opportunities for your clients, or is it completely diverse?
It's very diverse. That is one thing about the tax code. I always tell people, this is now changing now with self-driving cars. Maybe this analogy won't work, but doesn't matter. You probably drive a Mercedes, and I drive a Chevy. They both do the same thing. They're both putting us in the same direction. I can get there on time if I leave leave on time, and you have to do maintenance on your car. But they're 4 wheels and a steering wheel, and you put the thing in gear and you go. Same thing with businesses. I don't care if you own a trust company, or if you're a SaaS company, or if like we work with over 80 business brokers. It's a business, and you all have to comply to this thing called the Internal Revenue Code. And so, it's income, expenses, and then strategy.
Say business brokers would, so you use, are they your lead generators, or are they,
one of our lead generators? Yeah. In the past, we've averaged probably over the last couple of years about 40 to 60 million a month in helping businesses transition, like a business owner transition out. And it's funny. It's always, the first question we ask, do you have a letter of intent yet? Oh yeah. And my accountant says I'm going to pay X. That number is never right. Because the business owner typically doesn't ask the right question. The business owner will ask, am I going to pay 15 or am I going to pay 20% cap gains on this thing? And the accountant answers the question. I was talking to a group of physicians in Orlando that was selling for a significant amount. And I was modeling out what the taxes was going to be. And the guy said, this is not right. It's not right. You're double what my accountant says. This is not right. And I said, I'll tell you what, I'm going to take a snapshot of this spreadsheet. And the guy hung up, and his 2 partners like, hey, listen, we don't know if you're right or wrong, but we want the snapshot of the spreadsheet. So I gave him a snapshot of the spreadsheet, took it back. They took it back to their CPA, and their CPA got on the phone call with me next day. All 3, except the guy that hung up on me, wasn't there. And they said, we found out we asked the wrong question. We asked what the cap gains was going to be, and he told us we were going to pay 20%. What you went into
textbook answer.
Yeah.
Right.
Well, the accountant, your typical accountant is going to answer a very specific question. Because remember, that's why he became an accountant. I like black and white. And, but what they didn't realize is, they had built 3 new things in the last couple of years. They had taken advantage of, bonus depreciation, accelerated depreciation on all these huge pieces of equipment and surgery centers. And the net investment income tax, which is 3.8%, and all those things started adding up, and it's like, where did all of our money go? And so he didn't want to hear that. But the CPA says, oh no, I've got a spreadsheet just like that, but they didn't ask me that question.
Yeah, they answered the question that they were asked
exactly,
and didn't go any deeper. So you just take it to a whole new level.
Well, I think again, a CFO or a tax strategist, and I'm more of a tax strategist. I've been in the tax strategy industry since 2004, and it's I myself own probably close to 28, 30 businesses. So when a business owner asks me a question, it's not just about what I got to put on a tax form. Mm-hmm. It's like, wait a second. Do you want to know what your cap gains is, or do you really want to know what your total tax is going to be? And you will find out. That's the way it is. I love this question. One of the questions I like to ask a business owner is, so how much do you pay in taxes? And they will always give me the number that they paid on or around April 15th. And I remember last year I'm talking to a guy, and I said, yeah, we can save you about $300,000. And he goes, that's all I paid. I'm like, no, that's not what I paid. You were paying estimated payments of over $120,000 a quarter. And when you got to the end of the year, you had a really good year, and you had to pay an extra $300,000. So you were just behind on your estimated payments. Right. And again, it was like, wow. So you're going to save me almost 30%. But in his mind, when you ask him how much in taxes, he was just looking at the number on his 1040, because it all his pass through entity. Mm-hmm. He had only paid 300 and some thousand, but he had forgot that he was like $125,000 a quarter. So
you can see it happening, because it's one of those. It's almost like something that nobody wants to talk about.
Right.
It is what it, it kind of is what it is, and I'm going to owe what I owe, and let me go focus on my business. And my accountant said it was $300,000, so I got to give him $300,000. Yeah. And that's the end of the story. So it's probably it's probably one of the most minute things that most entrepreneurs think about, right?
Exactly.
They just go try to make the $300,000 to make sure they can pay the IRS.
Yeah, they remember that check that they wrote, but they don't remember what line 24 said.
Yeah.
Total tax paid.
Right. So you say you own 28 businesses? What?
So, and around, we go up and down quite a bit.
Is that like from clients that you invest in, or those are different?
We do some of that. My trend, because the reason I'm in this still goes back to that reason I told you about in 2004. Felt God calling me into the marketplace to be a minister in the marketplace. So there are businesses that I really feel aligned with that have a marketplace presence for Christ. And so, yeah, those type of things I'm really aligned with. And so I like to invest in those type of things. But, we're like everybody else. When I make money, I'm getting into real estate or things like that. And because of the team that we have, we can pretty much kind of recognize where opportunities are in business. But probably it's the empire, because probably 5 or 6 of those businesses are integrated into the tax side. So, we own Tax Robot, which is the largest AI generated R&D that manufacturers and businesses can use to get tax credits. It's used by some of the big name firms that we all probably recognize as a big name firm. So that's a totally separate entity because they kind of work more with manufacturers and things like that. We have a tax strategy center. So CPAs, most CPAs aren't going to come and work with Excel Empire because we're the full meal deal. We're the big daddy dinner that you're going to. A CPA that might have a client or two that really needs a little bit of help, they would just go to Tax Strategy Center, and Tax Strategy Center doesn't offer, we're not going to do compliance or your taxes or anything like that. We're going to give a toolbox to your CPA. So that's a totally separate entity. And then several years ago, we purchased the oldest insurance marketing organization in the country. So we get access to contracts and different things like that. And of course, registered investment advisors and things like that. Just things that kind of work around being a very tax-focused money manager. Because if we're helping people keep more money, then, my best thing to tell them is, put it in your family or your business. But if you got that taken care of, then as you start looking into how you're going to invest your money for retirement in the future, don't be like 99% of all other business owners that says, well, my retirement is my business.
And you actually do the tax you do the tax returns. You're not just a consultant or just an advisor. You do the whole. You are the CPA firm that does their taxes.
So we have firms both on the East and West Coast, and serve clients from nuts to bolts. Again, when you're doing the tax strategy, a lot of times we can work with CPAs, especially if somebody's selling up their business. They're not going to need our jet engine when it comes to on the other side of exiting a business. But somebody that's in the throes of, say they started out and they were a $3.5 million company, and today they're at a $7 million company, and they still have their secretary that started out being the HR, the bookkeeper and everything. Now she's the one he trusts, so she does his books. So, we can come in and we can take over the bookkeeping, the CFO services, and then ultimately the compliance and the tax strategies. I love that because then it's all on our shoulders, whereas if we just give you a tax plan and your CPA starts looking through it, one of the things that most CPAs who's not in a tax strategist, they're going to look at it and say, well, these 2 things we can do right now. And well, you've been a successful business owner. We've had a relationship and conversations before you even took this position that you're in now. And in the business world, timing, combining, and sequencing makes all the difference in the world. So you just can't cherry pick, well, we're going to use this strategy now. It loses its effectiveness if you do it out of sequence.
So speaking of timing, how long, I've heard this answered a couple different ways, but if somebody is getting ready to sell their business, how long before they do that should they be planning what that exit looks like from a tax perspective? You love that question.
I do love that question.
Because it's not the month before. right?
Yeah, typically, probably about 80% of the time, they've already got a letter of intent. So we're already behind the 8 ball. They already took about 80% of the things that we could do off the table. They also took about, 15 to 20% of increased sellability off the table. Because again, when somebody goes to buy your business, people will tell you your business is worth what people will pay for it. And that's the wrong attitude to take whatsoever. Because unless that guy's coming with cash, he's only going to pay what the bank will give him. And you know what the bank is looking at? They're looking at your books. Mm-hmm. And so ideally, we have a conversation with every one of our clients. If somebody comes to you over Christmas or Thanksgiving and says they want to buy your company, here's your situation. So every year I want to put that out in front of them. So we have on staff certified exit planners and advisors. They're the ones that actually help introduce the strategies, because again, they're thinking ahead of time. Like, what if you sell in 3 to 5 years? And so we love 3 years is great. Three years is great.
3 years to,
but we don't.
That's why I've heard that quite a bit.
We don't typically get that. I had a good friend come to me and says, "Hey, I feel kind of bad. I signed a document. I sold my business for $15 million in December of last year." And he goes, "Now I just started realizing how much I owe in taxes." And he goes, "Man, I've spent quite a bit of that money in buying real estate and everything, thinking that would offset." You
have to plan ahead. Number one, to save some of that tax, but number two, to know what know what it's going to cost you in the end, right?
Yeah.
So
there's things that we can do, but we would have been much more effective. I always tell people when they come to us and say, "Hey, I'm thinking about selling," don't sign an LOI. The moment you sign an LOI, and then we start putting strategies in place.
It's already.
If the
done.
IRS finds out that you had a signed document, they can start and unroll some of the structure that we put together, because then it wasn't you planning for avoiding taxes, it was evasion. Right. So they're not going to send you to jail, but they will roll it back and say this is the tax you owe.
Interesting. So that's just fascinating, and I'm sure that all the entrepreneurs out there that are going to be watching this
aren't taxes sexy? Yeah.
Well, no, but I'll bet a few people are going to be looking you up and talking about it, because once you explain it the way you explained it to me as an entrepreneur, it makes a lot of sense. So I think it's really a matter of getting that message out that you can help them legally, and help them take care of their taxes, take care of their exit, take care of their family, take care, I assume, next generation. And
many of the transitions that we're involved in, they're passing their business down to the next generation, and brother and sister are involved, but they've got another brother that's doing something totally different, and the parents are trying to be fair. Which I love that about it, but then they also have to realize that there's tax consequences that you got to think about to do that.
And we've got a couple great lawyers down there in the room, and
I've been very impressed with the BA group. Absolutely, this is a very, very focused group. So I've learned a lot in the last couple of days being a part of BA.
That's great. That was the next question I was going to ask you.
It's been a great decision.
That's awesome. Yeah. Good. I'm glad that there's just a wealth of knowledge, and just like you. I mean, there's 100 and a half experts in all those fields. So it's really fun to watch it evolve and come together and watch the value that people get out of it. Yeah. So Matt, great. That was great.
Absolutely.
It was a great conversation for
much.
entrepreneurs. Good
Appreciate it very much.